Hi there, my name is Gary Munson. I am a co-founder of Main Street Alternative Asset Planners. Hey, I just wanted to talk about why asset allocation is vital and why your asset allocation model, if you have one, is probably got some leaks in it. So why does asset allocation matter? Well, logic says in our long-term savings portfolio, we'd want to spread the risk around. They often use the eggs in the basket theory, where if you dropped one basket of eggs, then hopefully you've got some eggs in another basket that didn't get damaged. Modern portfolio theory shows that spreading our assets around in different kinds of investments is mathematically superior as the market goes up and down. In fact, a guy won the Nobel Prize back in 1990 talking all about this theory. But the point is, when one sector or asset class doesn't do well, then chances are another one is doing well. For instance, bonds do well when stocks don't, and so it's wise to have a little bit of each. And it's quite possible that you went to a 401k meeting one time and answered some questions about how old you were and when you were going to retire, and how you might feel about losing money for a year, or how you feel about just keeping a steady lower rate of return. And based on how you answered the questions, it pops out and suggests an allocation. Here's an example from Charles Schwab, where there's an aggressive model, a moderate model, and a conservative model. And as you look at it, they're just kind of allocating how much to each example. There's a large cap fund, and a small cap fund, and an international fund, and a fixed income fund, and they suggest some of it being in cash equivalents, and it varies based on your risk tolerance. But what you might see, and someone might even be more diversified, they might be in an oil and gas fund, or a gold and silver fund, or a government bond fund. But the bottom line is you're still in a fund. And so even if you are well diversified, when there's those crazy afternoons where the entire market drops terribly, the whole market drops. Even if it's a very sound fund or an individual stock in an individual sector that a company is very strong, the entire market will bring it down based on a lot of external factors that are beyond the control of anyone in the market, or just based on the emotions of individual investors. In fact, as we look at the influence of the market, sometimes market moves just leave these very solid stock companies battered even when they are solid. I have a friend that worked in a very conservative bank that hadn't done a lot of mortgage lending back in 2007, 2008. Here's a guy that's ready to retire with a massive 401k plan that's all invested in company stock, and the entire banking sector dropped even though they didn't even own these mortgages that were causing all the trouble. But bottom line is, he loses 40 and 50% of the value of his 401k, and he's got to work a lot longer to hope that comes back. Well, how do you get away from losing and having your portfolio beaten up just because the entire market moves down? Well, the way to stop it is to get away from the market. In fact, as we look at this, we believe that true diversification cannot be all on the stock market. We probably should start to include some Main Street type of assets instead of all Wall Street assets. And what we mean by Main Street assets, these are things that provide cash flow, tangible ownership, and or preserve purchasing power. It's not the paper assets. This is real stuff like rental real estate, or private mortgage lending, or purchasing a stream of monthly cash payments from some massive entity like a government or a huge insurance company, or owning some precious metals to maintain the value of the cash portion of the portfolio. And this is stuff that we can help people do. In fact, there are more options than just those individual ownership. We've got some Main Street type of funds. These are funds that range anywhere from 4 to 17 or 18%. Sometimes these funds invest in great low loan to value commercial real estate properties. Sometimes these funds invest in people who have legal claims against great big companies, and the companies are trying to settle on them and are trying to force them to settle early. This This fund lends these guys money, and in return they get part of the settlement, and that allows the individual, like the lady who got burned from the hot coffee at McDonald's, to carry that suit out to the maximum so they can get the max amount of money from the company. We've got a company that helps new government contractors. Do you realize the U.S. government puts out $1 billion a day in new contract bids that they want to come in? And some of these bids don't go to Fortune 500 companies. They want to motivate and work with small businesses, and some of them need to go to, say, a woman-owned business or a minority-owned business. Well, this company, this fund, helps these companies go in and do the bidding process, to go in and get the bonds that they need to make it work, and how to deal with the bids. And then after they win the bid, it helps them pay them and tide them over, because it takes about 6 months for the government money to start coming back after the services are being rendered. And these people help that. Hey, we've got one that works in casino gaming and profits very well from casino gaming, currently in Nevada. So we've got a lot of opportunities for people in Main Street type of investments away from Wall Street. And a lot of clients, the first thing they say is, well, what should I do? Where should I put my money? What should I buy? And you know what? We have no idea. We don't know you very well. We don't know your entire, holdings. You're not telling us everything that you have. So the only way that we know how to start to direct you is to send you to the asset allocation quiz, and once again start ask and answer all those questions. After you answer the questions, it's a short quiz. It might take you 3 or 4 minutes. And when you do, you'll receive a basket allocation where the system will put together for you an allocation of what percentage in real estate, what percentage in cash payments, what percentage in private lending, what percentage to precious metals or some of these funds. And it creates an allocation based on the success people are having that answer the questions the same way that you do. So we'd love to get you some specific information about that. Just go ahead and let's take another 3 or 4 minutes, click the button, take the asset allocation quiz, and then we'll send you over a specific basket allocation model so you'll know how to diversify even further with the Wall Street side and the Main Street side, so you can have a complete asset allocation model. So find that button, click it, and let's get you some more information. Thanks very much.